The primary reason for the 2008 crisis was the failure of mortgage-backed securities. These securities, shown in the movie The Big Short, were invented by Louis Ranieri, known as the father of mortgage-backed securities. His contributions revolutionized the way mortgages were financed and traded. But were these mortgage-backed securities so bad, or did they have some good purpose? Let's understand all the details of these mortgage-backed securities. If you understand how these mortgage-backed securities are made and how they work, you will understand exactly how the 2008 crisis happened. So pay close attention and make sure you watch this video till the end. In the early 1970s, Ranieri worked at an investment bank and quickly moved up due to his analytical skills. At that time, the US housing market relied on traditional mortgage lending, where banks held mortgages until repayment, limiting their capacity to issue new loans. In 1970, the Government National Mortgage Association introduced the first pass-through security, allowing mortgages to be sold to investors. This was the beginning of mortgage-backed securities. However, initially, these MBS were not a successful product. It was a new concept for investors. Also, they used to just pool all the mortgages together. Because of this, good loans and bad loans were mixed together, and investors had no idea whether these would be safe or not. Louis Ranieri saw an opportunity to take this concept further by developing a more sophisticated and scalable approach. This process of bundling lots of loans together is known as securitization. So, if you come across this word in the news, keep in mind that they are talking about mortgage-backed securities or asset-backed securities. Ranieri also pulled the loans together, but he gave structure to his method. The key advantage of his approach was that it spread the risk associated with individual mortgages across a broader base, which made these MBS attractive to investors. Louis worked on structuring them in ways that a MBS catered to different types of investors. He introduced the concept of tranches, or layers within these mortgage pools. Tranches such as AAA, BBB, and CCC. Each tranche had different levels of risk and returns, giving investors the choice to choose securities that match their risk tolerance and investment objectives. This innovation significantly increased the marketability of MBS and attracted a wide range of institutional investors, including pension funds and insurance companies. One of the critical challenges in the early days of the MBS market was the lack of standardization. Without a consistent framework, it was difficult for investors to assess the quality and risk of different mortgage-backed securities. Ranieri recognized the importance of standardization and pushed for the creation of industry-wide standards for MBS issuance and trading. To achieve this, Ranieri played a pivotal role in the development of the Secondary Mortgage Market Enhancement Act, SMMEA, of 1984. The act allowed the creation of standardized MBS structures. Because of this act, investors' trust in these MBS products increased. These innovations, introduced by Ranieri, had a huge impact on the housing market. It created a secondary market for mortgages. Banks can now sell their mortgage loans to investors. This freed up the bank's capital and allowed them to give more loans. Because of this, homeownership was more accessible to millions of Americans. After this, the housing market experienced substantial growth, leading to increased construction activities and job creation. Homeownership rates in the United States rose significantly, contributing to the economic well-being of many households. By the late 1980s and early 1990s, MBS had become a significant component of the global financial system. Financial institutions around the world began to embrace this MBS model and started applying it to other types of assets beyond residential mortgages, such as commercial mortgages, auto loans, and credit card receivables. These were known as asset-backed securities. Till this point, all was well and good, and it was working. And all the problems faced by the banks for liquidity and risk were solved by these MBS. Now, let's see a step-by-step process for creating MBS. The first step was to acquire a large number of individual home loans from various banks and mortgage lenders. For example, a bank bought 1,000 mortgages with different interest rates, terms, and geographic locations. They just pooled these mortgages together. Then they would create a separate trust, also known as a special purpose vehicle. The pooled mortgages were transferred to a trust. The trust was created specifically to hold the mortgage assets and issue securities backed by these assets. Creating a separate trust allowed banks to isolate the risk. After this, the issued loans were arranged in different tranches to create an MBS product. For example, senior tranche. This tranche had the first claim on the mortgage payments and was considered the safest, typically receiving a lower interest rate. Mezzanine tranche. This tranche was riskier than the senior tranches and offered a higher interest rate to compensate for the increased risk. Equity tranche. The riskiest tranche, which absorbed any initial losses from defaults but offered the highest potential returns. After this, each tranche was rated by credit rating agencies like Moody's and S&P. The senior tranche often received a high AAA rating due to its lower risk, while the mezzanine and equity tranches received lower ratings of BBB and CCC, reflecting their higher risk. Then, these MBS were marketed to a wide range of institutional investors, including pension funds, insurance companies, and mutual funds. The different tranches appealed to various investor risk profiles, from conservative to aggressive. For example, pension funds and insurance companies bought safe AAA-rated tranches, where some mutual funds bought CCC-rated tranches for more returns. Now, when the borrowers made the premium payments, the cash flows from the mortgage payments were distributed to investors in the MBS tranches. The senior tranche received payments first, followed by the mezzanine tranche, and finally the equity tranche. This waterfall structure ensured that the riskiest tranches absorbed losses first, protecting the senior tranches. Let's take the same scenario where a bank buys 1,000 mortgages and creates an MBS. The bank buys 1,000 individual home loans from various lenders. For simplicity, let's assume each mortgage is worth $200,000. So the total value of the mortgage pool will be $200 million. The bank transfers these 1,000 mortgages into a trust, which ensures mortgage payments go directly to investors, increasing trust. Now, from the $200 million, they create 3 tranches or layers. A senior tranche with a AAA rating for $120 million and a 3% annual interest rate. A mezzanine tranche with a BBB rating for $50 million at a 5% annual interest rate. And an equity tranche with a CCC rating for $30 million at a 7% annual interest rate. Now, when people pay premiums on their mortgages, they are distributed among these tranches. Let's say the total monthly premium payment from all 1,000 mortgage owners is $700,000. Senior tranche. The annual interest on the senior AAA tranche is 3% of $120 million, which is around $3.6 million. So, the monthly interest would be around $300,000. Mezzanine tranche. The annual interest on the mezzanine BBB tranche is 5% of $50 million, which is around $2.5 million. So, the monthly interest would be $208,333. Equity tranche. The annual interest on the equity CCC tranche is 7% of $30 million, which is around $2.1 million. So, the monthly interest rate would be $175,000. Now, this $700,000 is distributed among these tranches, so the AAA tranche would get their $300,000. The BBB investors would get their $208,333, and the CCC investors would get their $175,000. The remaining surplus of $16,667 was given to the CCC tranche investors. So, if there was any surplus after all tranches were paid, it was typically paid to the equity CCC tranche because they had taken the most risk. If the total premiums collected were less than required, for example, if only $600,000 were collected, then the CCC tranche would absorb the loss first, followed by the BBB, and lastly the AAA. The lower tranches would get paid whatever remained after paying AAA, then BBB. This is how MBS worked. Now imagine if all the borrowers in the MBS start to default on their loans and the total monthly premium collected is only $100,000, only a few people in AAA tranches would get paid. This is exactly what happened in the 2008 crisis. Banks gave bad loans to people who couldn't pay. Those loans ended up in MBS. When those people defaulted, investors all around the world who had invested in MBS lost huge amounts of money, causing the global crisis. This was the main reason for the 2008 crisis. Check out this playlist to learn more about the Big Short and the 2008 crisis.